Afternoon and welcome everybody, members and guests. My name is Andrew Brown and I'm the President of AustCham Singapore. Today we're very pleased to be presenting our very first webinar, thanks to the support of ANZ. This forum has allowed us to reach a much broader group of participants, including through our collaboration with other chambers. We have nearly 300 participants registered today from Singapore, together with Vietnam, Thailand and Laos. So welcome everybody. Like a lot of businesses in Singapore and indeed increasingly around the world, AustCham is being challenged by the coronavirus and the way in which we deliver events and insights to our members while the spread continues. AustCham has made a decision to postpone large-scale events while the spread of coronavirus remains a risk. So this is the first of a series of webinars and smaller events that we propose to deliver to our members over the coming months. While efforts to contain the coronavirus in Singapore appear to have been relatively successful, we are now seeing an increasing spread in other parts of the world, which will further impact labour movement and supply chain, and which is now causing increasing concern in global markets. In fact, news channels this morning have declared that the number of new coronavirus cases reported outside China exceeded the number of new cases in China for the first time. Before these most recent events, Singapore had already downgraded its economic forecast to between -0.5% and 1.5% growth, indicating a possible recession due to coronavirus impact on the economy. What the most recent events also highlights is the amount of uncertainty businesses are facing into. Today, our guest speakers, Koon Goh and Michelle Jamrisco, are going to explore the economic consequences in more detail. Just a couple of housekeeping rules. At the end of the presentation, guests will have the opportunity to ask questions. The Q&A session will start at about 1:15 p.m. You can do this by clicking on the Q&A button at the bottom of the webinar screen. And only selected questions, given the time constraints, will be answered. So first, I'll introduce the speakers. Koon Goh is the Head of Research at ANZ. Koon is the Head of Asia Research, and he has over 20 years of experience working in various economic and strategy roles across both the public and private sectors. ANZ's Asia Research team have been ranked in the top 2 for FX research and market coverage, as voted by financial institutions in the Asia Money FX poll between 2012 and 2016. And last year that survey, which was the last year that survey was conducted. Michelle Jamrisco is Asia Economics Correspondent at Bloomberg Asia. Michelle is Bloomberg's economics correspondent based in Singapore since 2017 and primarily responsible for Southeast Asia. Michelle previously spent 7 years in the Washington, D.C. Bureau, covering the US economy, Congress, and government procurement. So on that, I will now hand over to our moderator, Michelle.
Well, good afternoon, and thank you, Andrew, and thank you to all who have joined. I'm only sorry that we can't do this in person, but through the magic of technology, it's a pleasure to have this conversation online. In preparing for today's briefing, I was only half joking with Koon that I would have to wait until about an hour before this start to really craft the questions. As you all know and are familiar, the developments, especially around the virus these days, have been quite rapid. So we're needing to adjust on all levels and in all sectors. But I thought it'd also be helpful in these introductory remarks just to kind of take a step back and look back at where we were at the start of this year, which seems like an eternity ago. I'll first say that as a reporter, it's always kind of a headache to do the sort of look ahead pieces, end of year wrap pieces. And right now, as ever, it just seems kind of silly to put an artificial benchmark on some of these developments. But for the sake of sort of organizing our thoughts, I thought we would look at what was happening at the beginning of 2020 and where we thought some of these themes would be going to start the year. And I do remember that it seemed perhaps all too eerie that a lot of the forecasts heading into this year, both from economists, including Kuhn, and as well as investors and markets, were a little bit sedate, that most people were thinking, you know, perhaps we can count on a rebound, at least a little bit of a recovery from a battering in 2019 across a number of issues, and maybe not a cause for celebration in the global economy, but at least some relief from some of those stresses last year. So I was thinking about this at that time in terms of maybe 4 broad themes. One being less trade war pain, as the US and China worked through some differences, at least on a temporary basis, and tariffs were halted. The second would be an uptick in the electronics cycle, and particularly something that we were hearing here in Singapore from the government, and especially as 5G rollouts accelerate in the years to come. The third would be fewer electoral risk events. Of course, last year across Asia was a particularly eventful year in politics, with India, Indonesia, and Thailand voting, and Philippines voting regionally. And finally, generally supportive monetary and fiscal policy. Of course, the central banks had done a lot of work last year and were poised to continue in some respects in easing, and there was much talk of where the fiscal side could step in on that front. So the weight of all those risks seem to add up to maybe a couple ticks up in global GDP for 2020. And from where I sit, this all seemed a little bit too easy, but I can't claim to have thought of some brilliant new algorithm to adjust to where we are now. So if you can remember, back so many weeks ago, we were dealing with, at the start of the year, the US-Iran tensions, which again seems like forever from now, and the oil market risk that entailed. But then from there, we got deeply into COVID-19, what is now known as COVID-19 and the coronavirus. So if we look to the current state of play, and you just return to those 4 risks again, it looks quite a bit different. So the first one, again, the trade war, has now been replaced mostly by this virus risk and all the implications for the Chinese and global economies. The second, the electronics rebound, well, now that's being called into question, particularly around the disruption of the supply chains in places as critical as South Korea and Japan and Taiwan that are at the core of that industry. The third, the electoral risk, all of a sudden seems a lot more exciting, both here in region with Malaysia's recent developments, as well as abroad with a very exciting US state of play that perhaps is a distraction more than anything to those in this region. And then fourth, the policy framework looks a whole lot different, with monetary policy having to step in even more. And of course, this week we've heard a lot from the fiscal side by the likes of Hong Kong, and today again in Malaysia. So within each of these categories, we of course have countless sub questions to dive into that evolve by the hour. And because I'm a reporter, I maybe have better questions than answers. So I'll leave it at that and let Kuhn do his presentation. But there's a lot that we could get into, probably more focused on the virus right now, hopefully throwing in a few other questions, non-virus related in the region, and we'll see where that conversation takes us. But here we'll start with Kuhn.
Thank you very much, Michelle. Good afternoon, everybody. Give me a second while I share my presentation screen. So this afternoon, what I will be going through is really 3 parts to my presentation. I'll give you an update on the latest virus count, what's happening in mainland China, and what's happening in the rest of the world where we seem to be in a new phase of this outbreak. And then I'll quickly run through how we are thinking about the impact of the virus, just giving you a very simple framework the way we're looking at it. Obviously, it's still early days. The impact is significant. It's quite difficult to quantify. So what I'm trying to do is give you a way of thinking about it through the various channels, and then you can then try and apply it in your particular circumstances or business. And then towards the end, you're looking at some of these policy responses that have been coming. Will they be sufficient? What is the likely hit to the region's economic activity? So to start off with, in terms of the latest, in mainland China itself, I must say that it looks as if the situation is starting to come under control. Now, I know that there are a lot of skepticism about the Chinese data. I can understand that, given that in the space of 1 week, they have changed the way they classified cases 3 times. Having said that, that's the only data we have to go by. And based on that data, it's very clear that the number of new cases has fallen very, very significantly, particularly in the rest of mainland China. Now, Hubei province, which is the epicenter of the outbreak, is still reporting roughly around 300 to 400 new cases a day. However, that's well down from the 3,000 to 4,000 new cases daily that they were reporting earlier this month. So a significant improvement nonetheless. Now, the rest of mainland China, the case count has, in some instances, even fallen into single digits on a daily basis. So clear improvements there. And the strict containment measures that the Chinese authorities have taken, including locking down Wuhan, all the various travel restrictions that have been put in place around the country, certainly looks like they have worked in terms of trying to contain the spread of the virus. To the extent now that some travel restrictions have been lifted in some provinces, activity is slowly starting to get back. Still far from normality, but at least there is signs that people movement and traffic is starting to pick up. And of course, factories are starting to reopen. One thing that I'm on the lookout for, of course, is the potential for a second wave. Because when the lockdown happened, obviously with the travel restrictions, that helped to stop the spread. But as factories restart, and you can understand some of these factories in China employ thousands, sometimes tens of thousands of workers working in close proximity. Many of them live in dormitories, some even share beds. And there is the potential for renewed outbreak when activity starts to get up towards normality. So that's a risk. For now, I think I'm taking huge comfort from the containment in China. Now, for the rest of the world, before I go to the rest of the world, another thing that I look at closely as well in China is the suspected cases and the numbers of people under observation. As you can see from this chart, well down. So the number of suspected cases now are numbering in around 2,000. At one stage, they were well over 30,000. So again, another sign that there is certainly success in containment. Now, for the rest of the world, unfortunately, it's a different story. Now, for some time, it looked as if this was going to be largely a China-specific issue. The rest of the world seemed to have had things under control. Sure, there were some small increases in case counts. If you take away the cruise ship, things didn't look that bad. But within the space of really a week and a half, we've seen a massive spike up in case counts in the rest of the world, centered around South Korea, where cases have now shot up past 1,500, and Italy, where I think about a week or so ago only had 2 confirmed cases. Now they are over 400. And out of nowhere, even Iran reported a sudden surge in cases. And the number of countries and territories with confirmed cases has also suddenly jumped. Now this chart that you see here was prepared only yesterday and already is out of date, because now there are 48 countries and territories that have confirmed cases. So now we're in the next phase where the virus has spread into other countries and in greater parts of the world. So in terms of the impact, the way we think about it, it's also widened the potential implications for economies. Now in Singapore, there is some positive news starting to come through. The number of cases started to increase in Singapore early on, and the government put the alert level to orange. But since then, it appears that containment measures in Singapore are working. Number of cases are still inching higher, and we are now at 91. But if you look at the recovery rate, and really this is the impressive part about the outbreak in Singapore, out of the 91 cases, the majority have actually been cured and discharged with no deaths so far. So the net number of people in hospitals actually continue to decline. And it looks like the authorities have got on top of the clusters, and I'm hoping that going forward, we can see a leveling out in the number of confirmed cases. Now, just to give you an example of how the situation in Singapore has progressed relative to, say, Hong Kong. Hong Kong has now around 91 cases, so very similar to Singapore. Yet, of the 91 cases in Hong Kong, there's only been 20 that have been discharged and 2 deaths. So very vastly different types of outcomes, given the same number of confirmed cases. Now, this is not to say that the level and quality of care in Singapore is much better than Hong Kong. I'm not making that judgment. It could be that the cases in Hong Kong happen to hit more elderly or people with greater underlying conditions. But at least in Singapore, despite 90 over cases, if you look under the hood, actually the situation is improving. Now, there's a lot of talk and comparisons between COVID-19 and SARS. And that made sense at the early stage. After all, SARS did hit the region pretty hard back in 2003. But I have to say that COVID-19 is far worse in terms of SARS, both in terms of the number of deaths and in terms of the number of confirmed cases. In fact, going forward, COVID-19 will be the new benchmark in which any future outbreaks will be measured against. Now, geographically speaking, there's also a huge difference between COVID-19 and SARS. In SARS, yes, the epicenter, so to speak, was also in mainland China, but it also hit Hong Kong, Singapore, and Taiwan quite hard as well. This time, mainland China, once again, is the epicenter. The impact in terms of cases far surpasses that during SARS. Now it is hitting Korea a lot harder, whereas Korea only had 3 SARS cases back in 2003. So far, Singapore and Hong Kong, despite the number of cases, is nowhere near as bad during SARS. So the distribution is very different this time, and so too the economic implications for the region and for the country. Now, if you look at China, given the draconian containment measures that have been put in place, we have seen a huge reduction in economic activity. Typically, things start to pick up after Lunar New Year, but because of the extended holiday period and the travel restrictions, we haven't really seen a material pickup in activity until more recently. So there are a number of things that we track. Migrant worker flows, for example, still very low, haven't shown the post-Lunar New Year pickup. Public transport passenger numbers down over 80% year on year. Coal consumption, which typically starts to pick up as factories fire up again, still pretty low. Property sales almost outright collapsed to near zero for a while. They are starting to pick up, but still well under 100, where in normal circumstances, it should be around 300 to 400 a day. And car passenger sales numbers down about 90% year on year. So these are very significant implications that we can see in terms of economic activity in China. And this will have very important implications for the region. Huge part of it is because of the weight of China in the global economy now. When SARS hit in 2003, China accounted for only around 6 to 7% of global GDP. Their share of the world's exports were only around 4%. In terms of travel and tourism, back in 2003, Chinese tourists weren't really a major feature in airports. It's a different story now. Therefore, the impact of the contraction in activity the slowdown in traffic flow, especially of Chinese tourists, will have significant impacts on the region. Now, this is a very simple schematic framework to think about how the impact will hit individual economies. So there are already 4 channels that I see working its way through. The first 2 channels are the direct channels from the impact in China itself. The first direct channel is tourism. When the outbreak happened, there were a lot of travel restrictions, airlines cut flights, countries required quarantine from people traveling through or coming from mainland China. So there was a significant reduction in the number of Chinese tourists coming through. And that's a direct impact on economies, particularly those that are reliant on the Chinese tourist dollar. Then there's the direct trade impact. With factories shut for longer, activity pretty much down to a minimum, that's going to reduce China's import demand from the rest of the world. And that obviously will have flow-through effects on economies that are reliant on selling goods to China. So those 2 are the direct tourism and trade impacts on specific economies. They'll be different for different countries, but all in all, reasonably significant for the region. Then there's a third channel, which is the indirect channel. And this is really things like confidence and spillover impacts from other countries coming into play. And this is where things like the supply chain disruptions will feature. China is quite an important player in the global market for intermediate inputs. And if China can't supply certain key intermediate inputs, that's going to affect production capabilities in other countries. And already we have seen announcements from companies in Taiwan and Korea, for example, that had to cut back on production because they can't get critical inputs. That's a supply chain impact. And that's an indirect consequence that will have implications for certain economies. There's also a confidence factor as well. For example, when Singapore's alert levels were raised to orange, we saw a mad rush at the supermarkets, thankfully short-lived. But people do change their behavior. People stay at home, they don't go out as much, and that has flow-through effects on domestic consumption. So those are all the indirect channels. Now there's a 4th channel now starting to emerge, particularly in those economies that now have seen a spike in outbreak. So principally now South Korea and Italy, and hopefully not too many others. And these economies, on top of these other impacts flowing through from China, will now be impacted by how other countries see them. So Korea, for example, has raised their alert levels to the highest ever. Travel restrictions now being put in place by other countries. There's going to be a huge impact in terms of just domestic activity itself in Korea, over and above the hit they're getting from China. So these are the 4 channels in which to think about. How will that impact economies in the region? Now, the easiest one to measure is the direct tourism and trade channels. That's because we can get fairly good, decent data, and we can assess how important China is for each individual economies. So here I just listed some of the key markets in Asia. In terms of tourism, Thailand is by far the most reliant. Around 11% of their GDP comes from travel spend. And they're fairly reliant on Chinese tourists as well. About almost 28% of all visitor arrivals to Thailand come from mainland China. So at the start, Thailand stands to be the biggest loser from the tourism impact. Hong Kong also derives a significant share from tourism, and around almost 80% of visitors come from mainland China. The impact on Hong Kong this time around, I suspect, will not be as large, mainly because we've already had a massive reduction in the number of Chinese tourists last year due to the protests. So the impact will not be as large, but still it will be significant. And with Hong Kong already in recession last year, I suspect it could be 2 years running that they will have contraction in their GDP. For the rest of the economies, you can see there varying levels of importance in terms of the tourism impact. India will be the least affected, given that only 1% of tourism receipts contribute to the economy, and very, very few Chinese tourists overall. In terms of the goods channel impact, Vietnam has recently emerged as a huge export powerhouse. Now, exports account for a large share of their GDP, and around 16% of their exports go to China. And of course, they do have some reliance in terms of supply chains, getting inputs from there. So they stand to be somewhat vulnerable from the trade channel. Taiwan also is probably up there in terms of its impact, given that about over a quarter of their exports go to China, and around 50% of goods exports as potential GDP contributes to Taiwan. At the bottom, again, India fairly insulated. So you can see from the direct trade and tourism channels which economies are most at risk. We've already got some recent indicators just to try and get a handle on the magnitude of the impact so far. It's going to be a while before we can get any official statistics on what is happening, because official statistics normally come with a lag. So we've been trawling through all sorts of things that we can get our hands on, daily information, weekly data, to really try and get a sense of how big the impact is so far. Now, tourism is the one sector that has seen the most immediate hit. We know that anecdotally, and now there's a couple of data I'm sharing with you here. So Thailand, for example, as I mentioned, very exposed given the high reliance on tourism. The number of daily passenger arrivals, and these are international visitors, through its main airport, Suvarnabhumi, is down 50% from this time last year. And you can see, you can actually pinpoint the exact moment the visitor numbers started to collapse. It was when China went into lockdown mode. And I think it's going to be a while before we see those passenger numbers recover anytime soon. So the impact on the tourism sector in Thailand is already there. It's happening, it's immediate. In Singapore, we don't have as timely data, but what I have managed to trawl through is a simple internet search for Singapore holidays. It's collapsed, well down. Again, trigger point was when the orange alert level went to orange, conferences got cancelled. And at one point when Singapore had the second highest cases in the world outside of mainland China, obviously a lot of concerns there. So the tourism board has said that the country is losing an average of 18 to 20,000 international visitors a day. The impact on the sector here is significant, and as a result, the government has come up with a couple of packages to help the industry. And in terms of the trade impact, again, it's still early days to really assess the impact of factories staying idle in China for longer. The supply chain impacts quite difficult to really get a handle and trawl through. One of the things that I look at the moment quite closely is a proxy for global trade, and this is the vessel count. So this is a daily number. It counts the number of vessels around the world that are underway, that is, they are moving. And I hope that they're moving goods and not just moving empty cargo around. And I also deduct the number of vessels that are just sitting idle. The idea is that when trade activity is hot, there are more vessels moving, there are less vessels lying idle. When activity slows down significantly, there are less vessels moving, more vessels just going nowhere. And so this is what the vessels counts are, and it's split into commodities carrying vessels and goods carrying vessels. And you can already see the impact on global trade this is having. And this is since the lockdown, we've seen a significant move lower. So this is again another early sign that global trade is already being impacted by what is happening. Now, in terms of the indirect channel, this is where it's very difficult to really quantify and be exact, because a lot of it depends on how individual households and businesses respond. Different countries obviously will respond differently. And this is where we have to measure things like consumer confidence, anecdotes, how the other second round spillover effects are impacting. So for Singapore, for example, we know everyone has been extra cautious. Businesses have cancelled trips. They'll have effects throughout the economy. But if you go to some malls anyway, it's still crowded. I still can't get a seat at Raffles Place here during lunchtime. So things aren't all that bad. But of course, if you go out to Jewel, from what I hear, it's almost like a ghost town. So there'll be some impacts here and there. And these are the indirect channels. In Korea, for example, business confidence has slumped to a 5-year low. So obviously, in that country, the impact from what is happening there will be a lot more significant. So the varying effects will be different. Now, in terms of policy response, this is where it's very important. We know that economic activity will be hit quite badly in the first quarter. That's pretty much a given all the indicators we've looked at and tracked so far. And at this stage, it's too soon to say when things can start to bounce back. In SARS, most of the negative impact happened in the second quarter. Then we got a very strong rebound in the third quarter. This time around, at least we know in mainland China, things are starting to stabilize. So we hope that we can see a bit of a recovery in China in the second quarter. But given that the outbreak in the rest of the world looks like it's only just started, the impact might be dragged out a little bit more for the rest of the world. So it makes trying to assess any potential rebound a little bit tricky. But this is where fiscal and monetary policy action can be very important to play at least a little bit of a mitigating role to the impact. We've already had interest rate cuts by central banks in the region. We had China cutting rates, we have Thailand, we have Philippines, and I prematurely put Bank of Korea there because I did this presentation yesterday. I was expecting Korea to cut today, they didn't. So my bad, but it's very clear that policymakers in most part of the world are very preemptive. MES has engineered a de facto easing by weakening the Sing dollar earlier this month. PBOC injected massive liquidity. But really, to be honest with you, interest rates ain't gonna move the needle when it's dealing with an epidemic. It's fiscal policy that really needs to step up and that can make a difference. So the Singapore budget has, I believe, delivered. Hong Kong just yesterday announced a massive budget and a 10,000 Hong Kong dollar giveaway to every single resident. And I think other countries are coming up with their packages as well. Malaysia is set to unveil one soon, despite their political problems. And Korea is also preparing another massive supplementary budget. Thailand is also talking of one. So fiscal policy will play a very important mitigating role. But I stress it's a mitigating role, won't completely offset the negative effects we're seeing. And most they can do is try and help businesses out as much as they can to weather this difficult period. And really, that is what the Singapore Budget 2020 was designed to do. When the budget was delivered, there was a massive headline deficit number of almost $12 billion. The package itself, designed to combat COVID-19, came up to about $5.4 billion. But if you look at what the government was trying to do, part of that is things like the job support scheme, where they provide basically partial wage subsidy for firms. What the government is trying to do is really provide a bit of cash flow relief for companies over the next 3 months to tide them over. So what Singapore government and around the world and have a more material spillover effect to the respective economies. So this is where fiscal policy can play a very important role, help those firms through this critical period, keep their workforce, keep operations, and hopefully they're still there when eventually things will pick up. They'll definitely drive the strong rebound. If businesses shut down and firms and workers lose their jobs, it's going to be that much more difficult when things eventually turn around. So this is what fiscal policy is really designed to do in Singapore anyway. And the good thing about Singapore is despite such a large fiscal deficit, believe it or not, over the 5-year term of the government, and this is the last year of the government's term, they still have about $7 billion left in their kitty in terms of cumulative surpluses. So they still have cash stashed up just in case this particular fiscal boost isn't enough. They can then deploy more resources if needed. So again, at least there is some positivity knowing that in Singapore, still ample fiscal firepower to help out the economy. In terms of growth impacts, finally, I've recently downgraded my growth forecast for Singapore, and in fact, we downgraded growth forecast for many other economies in the region. Singapore specifically, I'm looking at only 0.4% growth for this year, roughly around where the government's official forecasts are. Q1, as you can see, it's pretty much going to be a huge write-off. I think we will have a huge contraction. Very difficult to avoid that. But the important thing is hopefully with fiscal policy, it can help businesses through the difficult quarter and then get some stabilization and improvement later on in the year. As I said, a lot of uncertainty still in terms of the timing of the rebound, the extent of it. All I can do at this point in time is continue to monitor the outbreak overseas, continue to reassess, and hopefully the framework that I gave you earlier of the 4 channels will help you at least think about how that might impact you at a more personal level for your business. So that's it in terms of the formal part of my presentation. I'll hand over now to Michelle, who will now grill me on a few things.
As I roll into frame here. So I do have quite a number of questions, but I do want to leave enough time for everyone to participate who would like to. But one of the messages, Kuhn, that I got out of your presentation is one that we've been trying to convey to readers, which is that there is a lot of nuance in this story across the region. Of course, governments and fiscal levers, as well as central bankers, are dealing with the virus in many different ways, and understandably, given the economic conditions they had going into it. But I wonder, in a sense, and you highlighted Singapore's success, at least in containing the virus thus far and bringing those numbers down quite a bit, even from what was a very high level. Are there, it returns us to the question that we often ask of Singapore, are there lessons learned for other economies in the region, even just right now, about what Singapore has done? And from a behavioral economic standpoint, is there something that other policymakers can take from Singapore's relative success right now? Or is it just so unique in many ways that every economy has to do everything for their own circumstances?
Yeah, that's a very good question, Michelle. I can't really speak for other countries, obviously. Every country will have their own capabilities and response policies. But again, if you look at how the Singapore government has handled it, they moved quite early. I think there was some criticism when the government raised the alert level to orange. I think some thought maybe that was a little bit premature, given that the case count was still fairly low at that stage. But I think by doing that, really acting preemptively, I think that's been part of the success in really trying to get early firm grip on things. And I think the amount of work that they have gone in terms of contact tracing, so every single infection was traced through in terms of their travel movements and really looking at people who potentially could have been infected, quarantining, leave of absence. I think all these measures, I believe, really helped in terms of keeping a lid on it. And I think acting early is really the key here. And this is where, you know, other countries now who are facing outbreak, they'll probably find it a lot harder because now they're starting in many respects from the back foot. I mean, Korea for the longest time, they had only, I think 20 or 30 cases, and now they're up to 1,005. So it's very hard for resources to suddenly, you know, start doing the contact tracing and detailed work that is required. So I think they'll really have to move to the next phase. So yes, I think there are things that other countries can learn from Singapore, but by the same token, I think the horse is probably already bolted for them.
Well, certainly also want to explore this from a fiscal policy standpoint. Mentioned, of course, Singapore last week announcing a planned record budget deficit for the year. Hong Kong yesterday, we saw some similar superlative, I should say, out of their stimulus announced in response to the virus. Malaysia today and Thailand come among them. So I'm wondering, I mean, if you're finance minister, is there anything that you can say about how you would advise economies to kind of channel this so that there's enough stimulus, but perhaps not too much? And I'm thinking in terms of somewhere like South Korea that has been dealing with household debt and other concerns, and there is a risk of overheating or overstimulating the economy. Is that even on the radar right now, or is it more in firefighting mode, just you know, batten down the hatches and throw all the money you can at this problem?
Yeah, so for fiscal policy, I think the starting point for each economy matters a lot. I think Singapore has been very fortunate just in terms of the timing of the political cycle. I think Singapore's ability to respond would be quite different if, say, this was the first budget of the new government's term, just because of the constitution. And the government has to run a cumulative surplus over a 5-year term of the government. And so happens that this year is the last year of the government's term. And the government so far in the previous 4 years had accumulated surpluses of about $20 billion. So that's why they had plenty of firepower to throw at it. Other economies won't be in a similar, positive situation. So for example, if you look at Malaysia, they already have a fiscal deficit. They've been running fiscal deficits for a long time. They've been trying to consolidate and reduce their fiscal deficit. So their starting point is already somewhat hampered by debt. And in the case of Korea, I think Korea has less of an issue. It's more around just trying to get agreement on adequate size of the package. Now, it's not just the size of the package that is important. It's, like you point out, what you do with it. Now, using fiscal policy to deal with something like an epidemic is very different from trying to handle, say, a normal kind of cyclical downturn. I think first and foremost, it's really about trying to help as many businesses, particularly small firms and SMEs, with the disruptions and cash flows. If you think about the implication of this, it's largely going to be your small SMEs, your mom and pop shops that are at risk of going under, because they're reliant on cash flow daily. They still have expenses to meet. If your cash flow dries up, they might be okay for a month or maybe less, and beyond that, that's it, cash crunch. So it's really a liquidity issue. So fiscal policy can help mitigate that, but you also need actually to tie in with that. This is where central banks and trying to bring the banks in to be able to loosen up their policy, assist businesses, not calling in loans, trying to maybe extend credit, just help them through this very difficult period. And that's going to be very important and part and parcel of the response. Because if you don't do that, and you allow businesses to fail, what you will find is that when this ultimately blows over, when the recovery comes, but these businesses are shut. It's going to take longer for new businesses to spring up, and the people that have been unemployed, it's going to take them longer to get back on board again. So that actually will hamper and slow down your eventual rebound. So this is where I believe fiscal policy has a very important role, really helping businesses stay viable in the near term.
Well, we'll just open up the queue of the questions, see how things are coming in. Okay, we'll take one. One question here is, what impact will this have on FX levels across Asia and ANZ?
Sure, okay. So we've just recently revised our Asian currency forecast. We put our monthly publication today. We've downgraded our forecast, particularly for Asian currencies, and we are expecting further weakness into the second quarter. And part of the weakness really is just around the impacts that, as I outlined earlier, the negative implications for growth. Now with the outbreak extending beyond China into more countries, I think the growing unease, uncertainty about the timing of a recovery will continue to weigh on currencies, particularly not only in Asia, but also, I think also globally as well. It is actually in this environment where I think the US dollar will probably be strong for a while. If you're looking for a so-called safe haven type of currency, and by the way, this is by no means is a formal recommendation for you to buy dollars, but I believe the dollar will probably stay strong in the interim because there's not really a lot of other alternatives. The US economy is not going to be as badly hit by COVID-19. They only have 53 cases so far. The US economy is largely a domestically driven economy, so they're not reliant on exports. So I think by default, it looks like the US economy will stay strong, and other currencies will probably have to bear the brunt of the adjustment.
Okay. Well, I think President Trump will enjoy hearing that message, sponsored by Kuhn. One other question here, will a huge domestic pent-up demand be able to kind of enable the Chinese economy to get back on track? And if so, how long will this take to flow into the regional and global economy?
Yeah, so what we've seen in past outbreaks is there's always a strong rebound. Whether it's outbreaks or whether it's just a typical cyclical slowdown, there's always going to be a strong rebound as pent-up demand gets unleashed. So again, the question that we have now is around the timing and the extent of it. So this is where the timing is still very uncertain. If we didn't have this sudden outbreak in Korea or Italy, I think I would have been a lot more confident because, as I mentioned earlier, it looks like the situation in China was starting to get under control. So, that would have given me confidence that, yeah, we could start to see a rebound in the second quarter. But with this most recent outbreak that's suddenly sprung up, I'm now less confident on the timing. So we're still uncertain. I'm still hopeful we have some rebound in the second quarter, but I just don't have the level of confidence at this stage. The size of the rebound, definitely, as we look at past history, it will be large. But again, this is predicated on governments helping as many businesses and workers as possible through this period, keeping them just there. Because if we have huge retrenchments, large business closures, then eventually when we get a recovery in China, then the businesses aren't there to take advantage of it, then you will just have a muted recovery initially.
That's helpful. As I scroll through these questions, I do want to take the liberty of asking a follow-up to that around the timeline. And since we're talking about different benchmarks for gauging recovery, it was my understanding, at least as of about a week ago, that markets were basically pricing in some sort of improvement in China and then throughout the region by that second quarter. And you mentioned the kind of quarterly measure. Is there a reasonable benchmark to think about what timeline we should gauge for the actual return to some sort of normality? Is that second half? Is that July, where it was around the time of SARS, at least for Singapore, or is it later in the year? I mean, are there any reasonable benchmarks to think of in that regard?
Yeah, so in terms of trying to, I guess, second guess when things might start to improve, within China anyway, I'm just tracking the daily indicators that I showed you, because I think that gives you probably the best indication of when things are starting to normalize, at least in China. So at this stage, things are starting to pick up, but still far from normality. And even those factories that open, I've read reports saying that in some provinces, about 80 to 90% of large businesses are operating again. But it doesn't tell you what capacity they're operating at. They could be operating at 20% capacity. They're still open, but there's still a huge chunk of output that's lost still. So these are the things I'm tracking. We're already end of February. If all goes well in China, then I'm hopeful that eventually maybe we might get back to some semblance of normal production levels in China, say by the end of March or early April. I think that's my hope. That's the, so I guess, optimistic type viewpoint. But that's mainland China. And that's assuming no second wave outbreak. Rest of the world, now it's difficult to say, given that we are in the initial stage of this outbreak. It will probably take a little bit longer for the rest of the world to feel confident enough to start to restart things. In fact, I think disruptions are now only starting to become more apparent in the other parts of the world.
So you outlined the hopeful scenario. We do have a question coming in asking, is a global recession possible? So in the worst case, I mean, what are you kind of aiming as the probability that we could fall into that sort of dark downturn?
I guess it's always possible to have a global recession. Look, in the first quarter, this current quarter we're in, no doubt a lot of the numbers that eventually will come up will be quite ugly. But a recession, as in technical term, 2 quarters in a row of negative GDP growth, I think it's possible, but I'm still hoping that we can avoid that. Again, depends on when this thing can really be curtailed. I think in mainland China, as I outlined, I think we're starting to see some hopeful signs. So hopefully we'll get some recovery in China in the second quarter that might help out the rest. In Singapore, I am actually expecting a very nasty Q1, but a little bit of a recovery in the second quarter. For other countries like Korea and Italy, which is only now starting to be impacted, I think that will be a slightly different story. I think for those other economies, they might see things dragging out a little bit longer. Hopefully at the moment, the engine of growth looks to be the United States. If the United States can manage to sail through relatively unscathed, that might be enough to rescue the global economy.
A couple questions coming in on a sectoral level. So I do want to ask you, one participant asked, do you have retail traffic data for mall operators? We understand from our customers that foot traffic is down 30% in Korea and Singapore, with Capital N today announcing that foot traffic is back to 95% of pre-coronavirus levels. So is there anything we can take away from this data?
Yeah, I don't have, unfortunately, I don't have the real-time foot traffic data for mall operators in Korea or Singapore. Yeah, I know what you meant by Capital N's announcements today. It's good to see, some foot traffic coming back to normality. But again, I think in Singapore, as I outlined earlier, because the government looked to have gotten things under control a lot earlier, I think things will probably get back to normality quicker in Singapore. It is actually the other countries, particularly Italy now, where I heard a report that since the outbreak, there's been a 40% cancellation of all hotel bookings made recently. That impact for them is only now starting to flow through. So it's going to be very, very different. So all we can do is, see how the underlying outbreak in each individual economy plays out. Some will recover faster. Some, I think, is only in the early stages of feeling the brunt.
Certainly, it's been interesting to watch the travel industry as well as they cope with better deals and try to attract people back in. We have time for one more question. I do want to get at a sort of non-virus related angle, and we have someone here that's asked, do you see any other black swans, perhaps sudden impacts from gray rhinos, including rising debt in China on the horizon? And I would actually just throw in, you mentioned Malaysia, if you have any insights onto how that political situation might impact the economies right now as well.
Yeah, gosh, I mean, it's only February. We already had two sort of left field events, the US-Iran one, which thankfully didn't go anywhere, but that had the potential to turn nasty, and now this one. So look, there are always, sort of black swans, gray rhinos, call them what you want, sort of the unknown unknowns, so to speak. In terms of, I guess one thing I will mention, it's not really a unknown unknown, so to speak. Once we sort of deal with this situation, and I'm confident eventually we will, one thing we have to recognize, especially in China now, where they're going to employ a lot more fiscal stimulus, and that's the right policy response, don't get me wrong, right? They need to do that. So huge fiscal response, PBOC injecting lots of liquidity, asking the banks to take it easy on companies, etc. What we will end up with, of course, once we're through this, is China, which already has a high level of debt, will end up with even higher levels of debt, which then they need to contend with and manage down the track. So how they do that, I think it's not the main worry now. It'll be a worry for later down the track. But certainly that overhang is something they need to find a way to manage and work through. And that could have maybe longer term implications for their long-term potential growth rate, so to speak. So it's not really a black swan, but I can foresee that's sort of the next thing they need to deal with. And that goes the same for some of the other economies that already have that level. So Europe, for example, I mean, Italy doesn't exactly have a lot of fiscal firepower. You know, if they decide to spend up more, then they're going to have a little bit of an overhang. In terms of Malaysia, to be honest, we are blindsided by the events over the weekend. And I'm not quite sure how things are going to play out at the moment. I'm not quite sure whether or who the new Prime Minister will be. It's quite an unfortunate twist in events. 2 years after the groundbreaking elections. Let's hope, things can settle down very quickly, especially at a time when countries really need strong leadership, particularly when they're putting together a fiscal stimulus package to help the economy through. So not knowing who is in charge, or having a very unstable coalition government is definitely not helpful in the current environment.
Well, that ends our time now for our very intimate online chat. Thank you, Koen, for all your insights, and certainly a lot to keep us busy days and weeks to come. I'll just kick it back to Andrew for some closing.
Thanks, Koen and Michelle. On behalf of AustCham and ANZ, I'd really like to thank you both for your time and commitment today. It's really appreciated. Obviously, there's still a lot of long-term uncertainty, and the situation changes every day. So we unfortunately don't have the time to update you daily, but clearly we need to monitor the success of containment measures because the longer term economic impacts could be quite significant without that. We need to keep an eye on government responses, including fiscal and monetary policy. It will now be interesting to see whether other countries like Italy and Korea have the political and social capacity to contain the spread as successfully as China and Singapore seemingly has. And we're likely to see a dash for cash when containment measures succeed and we revert to some level of normality. So thank you everyone for your participation. I think there's been a great successful first webinar. Thanks for the collaboration between the team at AustCham and ANZ for making this work. A couple of reminders. Stay tuned for other webinars and announcements around some smaller events that we propose to host over the coming months while this uncertainty still plays out. Membership renewals are due at the end of March, so we really need your support and look forward to you renewing. And please refer AustCham to your friends and colleagues. There's also a members survey that we distributed in relation to coronavirus and the impact that it has on your business, and would like to collate that and then be able to share some of the insights that come from that survey. There's also a number of Q&A questions that haven't been responded to today, so I'm going to, after this, beg Koen and his assistance in responding to those so that we can share those with the members as well. So on that note, I'm going to close, and thanks again for everyone's participation.